The offloading of the failed bank securities, that process is about to begin. What do we know?
Well, what we know is that BlackRock is increasingly becoming a big advisor to the FDIC. They were brought on earlier in April, and we will be kicking off these sales where the FDIC needs to offload $114 billion of assets, many of them mortgage-related, that it picked up from Silicon Valley and Signature Bank. BlackRock expects to ramp up the trading of the mortgage tools to 4 days a week, planning to sell $1.5 billion to $2 billion a week, and it's expected to be orderly. Meanwhile, in terms of aftermath of these failed banks with Silicon Valley and many of the others, causing investors not only to withdraw assets, but a lot of banks to sort of hold off on any activity, Wells Fargo became the first in selling $3 billion of bonds, the first to do so post-SVB. It's the first large U.S. bank really to sell bonds since the collapse. We're also seeing a lot of deposits return to smaller banks. Again, I mentioned the banking turmoil caused many American investors to learn for the first time that anything over $250,000 was not insured. So smaller banks saw a lot of outflows. We are now seeing a return to a lot of those deposits, and that's again an indication that many are starting to put the banking turmoil of last month in the rearview mirror. Not clear yet. We still want to hear from the banks set to report.